Happy Tuesday morning, my dear friends. Okay, let's start for the day. Today we'll be discussing regarding the first head of income. That's going to be a income from salaries. I'm assuming that you people have completed your basics as well as a residential status as well as the third chapter, income which do not form part of the total income. I'm assuming in this way. So let's start our chapter. That's going to be a income from salaries. That's in first head of income. There are three sections which governs income from salaries. That's going to be section 15, section 16, section 17. Three sections. Always remember, my dear friends, in an income tax, always the first section of any heads of income is considered as an charging section. It's called as a charging section. Here also it's same thing. Section 15, 16, 17. Section 15 is treated as a charging section. Next one. Before going for the charging section, you should understand the basic considerations for the taxation of salary. When we are studying this chapter, income from salaries, IFS, a short form is called as an IFS, income from salaries. You should think from the employee's point of view. Not from the employer point of view. When we are solving an income from salaries chapter, you should think from the employee's point of view. When you're solving a PGBP, profit and gains of business and profession, you're supposed to think from the employer point of view. So we all will think from the employee's angle. So example, there's a person whose name is Sandeep. Is an employee of Infosys Limited. So Sandeep is an employee. Infosys is going to be employer. So there are two parties exist over here. So what is the relationship between Sandeep and Infosys? The relationship between a Sandeep and Infosys is going to be an employer and employee relationship. So the first thing, to charge any income under the head salaries, there should be an employer and employee relationship. If there is no employer-employee relationship, the chargeability fails. Hope you people are understanding. So between Sandeep and Infosys, there an employer and employee relationship exists. That's why whatever the remuneration or salary part a Sandeep receives from an Infosys, is chargeable to tax under the head salary. That's an income from salaries. Next one. Assume Mrs. Asha. She is an employee of Jain College. Okay, meaning she is a faculty in a Jain College. There's an employer and employee relationship exists between whom? Between Mrs. Asha, and it's a Jain College. Clear? So whenever Asha receives a salary from the Jain College, for her it is going to be chargeable to tax under the head income from salaries. Same thing. Now Asha has been deputed for the purpose of evaluating the papers in the Bangalore University. Bangalore University also pays her a remuneration. Okay, but there's no employer or employee relationship exists between the Bangalore University and Asha. That's why the amount, the fee, a consulting fee or remuneration, whatever the Asha receives from Bangalore University is not going to be chargeable to tax under the head income from salaries. It's going to be chargeable to tax under our last head of income. That's going to be an income from other sources. It's called as an IFOS, income from other sources. So this is the head of income. This is the last head of income where it is an income. It is chargeable to tax, but it is not going to be charged either in the income from salaries or income from house property, or it's going to be PGBP, or it is not taxed under capital gains. It is going to be a charged under the head income from other sources. Next one. As I discussed, or chapter, it's an income from salaries. Point to be noted, what should exist? There should be an employer and employee relationship should exist. There must be an employer and employee relationship. The relationship may be either in the past or present or the future between the person paying the money and the person who's receiving the money. Next one. Salary received by a professor of a college is taxed under the head income from salaries, whereas a valuation fees which has been received by the lecturer is not going to be from the university, is not going to be charged under the head salaries. It's going to be chargeable to tax under the head income from other sources. Next point, it's very important. Being a partner in a firm, what are the emoluments we will be receiving? We will be receiving remuneration, that's called as a salary. We'll be receiving interest on loan if we have given the loan to the partnership firm. Since we have invested the capital, we receive an interest on capital. We also receive a commission. Since there is no employer and employee relationship exists between the partners and firm, all these emoluments are not going to be chargeable to tax under the head salary. The remuneration, interest on loan, interest on capital or commission part, if a partner is receiving, that's going to be chargeable to tax under the head PGBP. I'm assuming that it's clear. Next one. There's a concept called contract of service and a contract for service. Many would have observed that whenever you join an employment, you're supposed to sign a contract. It's called as a contract of service. Two concepts, contracts of service and it's going to be a contract for service. What is this contract of service? In the contract of service, take an example, we'll go to our old example, Sandeep and Infosys. Infosys tells Sandeep what to do. What is the work he should undertake? And Infosys also tells him how to carry out this work, what to do and how to do. That's why when there's a concept of what to do and how to do exists, it is going to be chargeable to tax under the head income from salaries. Next. Assume I'm a partner in a firm, a person who's a client who comes to our office and he requests us, I'm planning to sell a site, a plot, a site, okay? Let me know what are the taxation aspects which are involved in this. What client is telling us, client is going to tell us what to do. What to do means the site is being sold out in the future, okay? So what to do, what is the tax implications for that? What to do, he's told by the client. How to do it? What is the taxation part? What is the capital gain involved in this? How that we are the people who are going to guide him, yes or no? So what to do is by the client. How to arrive at the capital gain? It is done by us. Either it's going to be company secretaries or either it's going to be our chartered accountant. When the client tells us what to do and how to be done, how to do it, it is by us. When the two or more different persons involved in this, how and what, Then what comes into picture? The income what we receive, the client fee what we receive. For us, it is not going to be chargeable to tax under that income from salaries. For us, it is going to be chargeable to tax as a professional income. This professional income is going to be charged to tax under the head PGBP. Why? Because between me and a client, there is no employer and employee relationship exists. He has come for a consultancy. So we will give a consultancy and we'll charge a fee. The fee is going to be our professional income for us. Next one. Advance of salary, advance of salary, advance against salary. Many people have a notion that these two are the same concepts. Advance of salary, advance against salary. No. Remember, my dear friends, in income tax, you have to segregate the income between two aspects. One is going to be a revenue item, next is going to be a capital item. Normally, all the revenue items are chargeable to tax. All the revenue items are chargeable to tax unless specifically they are exempted. Take an example, agricultural income, it is a revenue item. It is chargeable to tax, but it is specifically exempted under section 10 subsection 1. Even though it's a revenue item, it is exempted under section 10 subsection 1. It is not going to be a charge to tax. Next one. All the capital items are not chargeable to tax unless specifically they are included. Take an example, agricultural land only. Agricultural land situated in a non-specified area. Agricultural land is in capital item. Answer is yes, it is in capital asset. Even though it is in capital asset, it is situated in a non-specified area. Assume non-specified area. As of now, it's going to be a non-urban area. It is going to be exempted. But the same capital asset, if the same capital asset, assume it is a site which is situated in a urban area, that's going to be a specified area. Even though it is in capital asset, it is chargeable to tax. So all the capital items are not chargeable to tax unless specifically they are excluded. Okay, next one. I took a loan from Mr. X. A loan is a capital item. Answer is yes. Even though it is a capital item, Act tells you to not to charge loan item. Act has not charged loan item, meaning Act has not included this loan item in the chargeability. That's why revenue items are chargeable to tax unless specifically they're exempted. All the capital items are not chargeable to tax unless specifically they're included. You sell a jewelry is in capital asset. Answer is yes. But when you sell a jewelry, what is going to arise? A capital gain is going to arise. It is chargeable to tax. We'll draw a conclusion. Give a connection to this now. So loan, advance against salary. Now we go to your employer. You inform your employer that I need a loan of 10 lakh rupees. So what you will do is every month you deduct 10,000 from my salary. So what is this advance against salary? One advance against salary. This is in the form of a loan. So you're getting this amount of 10 lakh in one shot. This loan amount is in capital item. Since it's a capital item, it is not chargeable to tax. Next is an advance of salary. April month salary, since you have an emergency, you've written a letter or you sent a mail to your employer to receive the salary in the month of March itself. So for PY 2021-22, you receive 12 months salary plus you're going to receive a April month salary also. So in the PY 21-22, how many months salary you'll be receiving? We'll be receiving 13 months salary. Advance of salary. Advance of salary is salary received in advance. A April month salary has been received in the March itself. So whenever you receive it in the year of receipt and at the time of receipt, it's going to be a chargeable to tax. Next is going to be a chargeability. Important. What is going to be a chargeable to tax? As the Act says, which section is that? Section 15 deals with the chargeability. Act tells that salary will be charged to tax. Salary will be charged to tax on the due or receipt basis, whichever is earlier. Remember, my dear students, section 15 tells you, gives you the chargeability. It tells you the salary is chargeable to tax on the due or receipt basis, whichever is earlier. Chargeability, we'll take an example. The PY applicable to us is going to be a PY 2021 and 22. We'll continue with our example. It has got 12 months. Okay. April month's salary, that is going to be April 2022 salary, I've received in advance. It is in advance. I received in the March month itself. So in the PY 21-22, how many months we'll be having? We'll be having 13 months salary. We are going to offer 13 months of salary for the purpose of taxation. Salary will be taxed on due or receipt basis, whichever is earlier. I'm receiving the April month salary on the 8th of March itself. That is in 8th of March 2022. Salary is not due that time. Yes or no? When the salary is not due, what it is? It is in receipt. So salary is going to be received in advance. So April month, how many? So sorry, for PY 21-22, you're going to include April 2022 also. So you'll be having in 13 months. Next one. What is this due basis or receipt basis? Assume you join your office on the 1st of January 2022. Will they pay you salary every day? Answer is no. Every day they're not going to pay. But salary gets accumulated every day, but it is due when? It is due on the last day. What is the last day? The last day is going to be a 31st of January 2022. So you'll be receiving on the last day, or they'll give you within 10 days of the subsequent month. That's going to be a 10th of February 2022. This is the concept, a due basis. Every day you're not going to receive. It will be accumulated and it is going to be a due on the specified date or a specific date. Usually it's going to be in month end. Next one. For PY 21-22, I received in salary only for 10 months. My employer paid a salary of only 10 months. That is going to be from April 2021 to January 2022. I've received only 10 months salary. Now, assume I am in the July 2022. I'm supposed to file my returns. In my returns, I'm supposed to disclose 10 months salary or I'm supposed to disclose 12 months salary. Answer is 12 months salary. Why it's a 12 month salary? Look at this concept. A salary will be taxed on due basis or receipt basis, whichever is earlier. A February month's salary is already due. A February month's salary is due on 28th itself. A March month salary is due on 31st itself. We are in July 2022. It is already due, even though it is not received, but it is due. Due or receipt, whichever is earlier. That's why 10 months salary plus February and March, you're going to offer a 12 months salary while filing your returns in the July 2022. Next, we'll go to a deduction section. For 15 is done. It's a charging section. Next is going to be deduction. As I discussed, 15, 16, 17. 15, section 15 is going to be a charging section. Section 16 is a deduction section. You're supposed to find out what is your gross salary. From the gross salary, all these deductions is going to be claimed. Three sections involved in this: section 16 1A, section 16 1A, section 16 2, section 16 clause 3. Clause 1A, clause 2 and clause 3. Section 16 1A, it is a standard deduction. A standard deduction of 50,000 or amount of salary whichever is lower. Standard deduction of 50,000 or amount of salary whichever is lower. Since you people are attempting an MCQ, you will be having an option standard deduction 50,000, or it's going to be a standard deduction 50,000 or amount of salary which one is lower. What you're going to tick? You're not going to tick just 50,000. You're going to tick standard deduction of 50,000 or amount of salary whichever is lower. Please read the provisions carefully. Okay. Next is 16 clause 2, deduction towards an entertainment allowance. These entertainment allowance is given to both. Entertainment allowance is given to both, that is a government employee, it is given to a non-government employee. Both it will be given by an employer. Why? These allowances are given to employees to meet the various expenses incidental for entertaining the customers. But who is eligible to claim a deduction? Who is eligible to claim deduction of entertainment allowance? It is only a government employee who can claim a deduction. Suppose take an example, Mr. X. Mr. X is working for an railways. He has been given an entertainment allowances. Okay. Me, I'm also working in Infosys Limited. I have also given an entertainment allowance. Who can claim this entertainment allowance? Only a person who's working in a government sector can claim an entertainment allowance. I cannot claim an entertainment allowance, but I can receive this, but I cannot claim a deduction. So let's go to section 16.2. It's an entertainment allowance. We'll do it in depth. Entertainment allowances received by a government employee is only eligible for deduction. Under which section is only eligible for deduction? Under section 16 clause 2. So if government employee is receiving, then it's going to be claimed as a deduction under section 16.2. If non-government employee is receiving, he cannot claim a deduction. For him, it is going to be fully chargeable to tax. Next, a deduction is allowed only to government employee to the extent of least of the following. What is the least of the following figure? It's going to be a statutory limit of rupees 5,000 or 1/5 of the salary or actual amount received. Which one is lower can be claimed as a deduction. So what is the salary for this purpose? Very important. A salary definition differs from provision to provision in this salary chapter. Salary for this purpose means only basic pay. It doesn't include DA, it doesn't include commission, it doesn't include any other taxable allowances and all. A salary is equal to basic pay. So we'll solve the question. Hope the screen is visible. The basic pay is 1,40,000. Entertainment allowance received is 10,000. What will be the taxable salary if assessee is a non-government employee? Assessee is a government employee. Solution. If an assessee is a non-government employee, so government employee, non-government employee doesn't matter. First, you're supposed to find out gross salary for both. Basic salary, that's going to be a basic pay, 1,40,000 figure, a same figure over here. Entertainment allowance 10,000, 10,000. A gross salary is going to be 1,50,000. We are solving for non-government employee. Non-government employee. A standard deduction will be allowed for both government as well as non-government employee, which we are covered under section 16(1)(a) of 50,000. Since he is a non-government employee, I cannot claim entertainment allowance. That's why it is going to be a nil. So 1,50,000 minus 50,000, taxable salary is going to be 1 lakh. Next one. I request all the students to use a calculator. I'm assuming that you people are ready with the calculator. Next one. Government employee. Basic pay 1,40,000, entertainment allowance is 10,000. So gross salary in both the cases, it remains the same. Here also it's going to be a 1,50,000. Here also it's going to be 1,50,000. It remains same. Next one, with respect to a standard deduction, that also remains same, 50,000, 50,000. Here we have not given in 16(2) deduction. Since he is a non-government employee, here is a government employee, we will be giving him a deduction with respect to 16(2). What it is, first is the statutory limit. What is the statutory limit figure? Statutory limit figure is going to be a 5,000. Next, 1/5 of the salary. 1/5 the salary. What is the salary figure? Basic pay figure. 1,40,000 into 1/5. So 28,000 and 10,000. When you see 5,000, 28,000, actual amount of EA received. EA is nothing but entertainment allowance received is 10,000. Among which one is lower? 5,000 is lower. So I'm going to bring this 5,000 to the outer column. 5,000 to the outer column. So 1,50,000 minus 50,000 minus 5,000. Taxable salary is going to be 95,000. I'll give you 1 minute time. If you want to copy, please copy. Assume it's done. Next is going to be a professional tax. So in case of a professional tax, it's a PT. It is in state levy. Please remember that. A income tax is in central levy. A professional tax is going to be a state levy. It is levied by a state government. So professional tax will be paid by the employee. Sometimes it's going to be paid by the employer also. Next question, ma'am, when is the professional tax applicable? So professional tax criteria depends from the state to state. Take an example in Karnataka. If the salary is up to rupees 15,000 per month, there is no professional tax. If the salary is from 15,001 and above, it's going to be rupees 200 per month. Take Tamil Nadu. If the salary is up to 3,500, no professional tax, it's going to be nil. 3,501 to 5,000, a professional tax is 22.5 rupees per month. If the salary is more than 5,001 to 7,500, then it's going to be 52.5. So like that, for each and every state it differs because it is a state government levy. Next, if you take an Andhra Pradesh, same threshold is 15,000. If you're receiving a salary of 15,000 per month, there's no PT, there's no pre-PT, the professional tax is nil. 15,001 to 20,000 rupees is your salary, then 150 rupees per month. If your salary is more than 20,000 rupees, then it's going to be a 200 per month. Like this, it differs. What is going to be claimed as a deduction then? The professional tax which has been actually paid can be claimed as a deduction. Hope it's done. So we'll solve the question. This question has got all three deductions. That's going to be 16(1)(a), 16(2), and it's going to be deduction under section 16(3) as well. Okay. Next one. Able to see this question? I'm assuming that. Basic pay is 1,40,000. PT what they paid is 200 per month, assuming that the PT has been paid by the employee himself. Point number one. Next one. Entertainment allowance received is 10,000. What will be taxable salary if the assessee is a government employee? Okay, the question is clear. Basic pay information 1,40,000. The same figure over here. Basic pay, it's 1,40,000. Entertainment allowance, this figure, 10,000 rupees. So gross salary is going to be 1,50,000. Section 16(1)(a), Section 16(2), Section 16(3). 1A deals with the standard deduction, 2 deals with the entertainment allowance, 3 deals with the professional tax deduction. 16(1)(a) is standard deduction of 50,000 rupees. 2, it's going to be entertainment allowance. Since he is a government employee, look at this, they've given that he is a government employee. All the 3 criteria is going to be applicable. First, statutory limit of 50,000, actual entertainment allowance received 10,000, 1/5 of the basic pay, 1/5 of the basic salary, that's going to be 1,40,000 into 1/5. It works out to 28,000. So what is the least figure over here? Least figure is 5,000. So I'll be bringing this 5,000 figure to the outer column. 5,000 to the outer column over here. This is with respect to entertainment allowances. Next is going to be a PT. A PT 200 rupees is actually paid per month. 2 into 12 works out to 2,400. So it's going to be 1,50,000 minus 50,000 minus 5,000 minus 2,400. It works out to 92,600. Hope the concept is clear. 1,50,000, from that I'll be deducting 50,000 standard deduction. From that I'll be deducting 16 entertainment allowance. Again I'll be deducting 2,400 with respect to our professional tax. Next question. Ma'am, do we need to remember the PT of all the states? No, they will give it in the question what is the PT figure. So there's no requirement of remembering you the PT with respect to each state. Next one. We'll go to exemptions under the head salary. Before going for the exemptions, you should know what is the definition of salary. The salary, it is an inclusive definition. A salary includes few things. It's an inclusive definition. It is given under section 17 subsection 1. Section 17 is a definition of the salary. Section 17.1 deals with the salary. 17.2 deals with the perquisites. 17.3 deals with the profit in lieu of salary. So before going for the exemption under section 10 subsections 10, 10A and 1010A, all these exemptions, we have to know the definition of salary. A salary includes wages, annuity or pension. What's the meaning of annuity? Periodical payment, what you're receiving, it's stated as an annuity. Usually what we will think, the basic salary, what you receive, it's only a salary. No, it also includes your pension, gratuity, commission, advance of salary. It's not advance against salary, advance of salary, leave encashment. You would have heard from your parents or from your neighbor or from your friends and all. He has a leave credit to his account. He has encashed it. So what he has got leave encashment. He has encashed his leave. That is also covered under definition of salary. That is also chargeable to tax. Next, annual accretion to RPF. If the employer's contribution is more than 12% of the salary, that is also chargeable to tax. That's also included under the definition of salary. That's also chargeable to tax. So when RPF contribution by whom, one is going to be a contribution by employer if it's a more than 12%. Next, if they give an interest to an RPF, it is more than 9.5% per annum. So it's going to be an interest accredited to an account, that is an RPF account, in excess of 9.5%. That is also included under the definition of salary. A transfer of a balance which is lying in the URPF account, which is lying in a URPF account to RPF account, and compulsory contribution to a pension scheme which is referred to section 80 CCD by employer. All these things are included under the definition of salary. Bonus is also included. So please remember, even though a person is retired, a pension if it is more than 2,50,000, 2,50,000 in normal SSC. If it's a senior citizen, it's going to be a 3 lakh rupees, a pension what he is receiving. This 3 lakh rupees is also going to be a chargeable to tax subject to 87A. 87A is considered as an rebate. Will not be covering entire salary chapter, so I'll try to do some basics of the salary chapter. Next is going to be in exemptions. Exemptions under the salary. The following are the exemptions which are available under the head salary. First is going to be a death cum retirement gratuity. The exemption is granted under section 10 subsection 10. Commutation of pension, it is under section 1010A. Encashment of earned leave, it is under section 1010A. A voluntary retirement compensation received, it's under section 1010C. A retrenchment compensation received, it's under section 1010B. Okay. So these are the exemptions which you will get under section 10. We'll go to death cum retirement gratuity. It's a death cum retirement gratuity. The exemption is given under section 10 subsection 10. It is a monetary benefit given by an employer to employee on occurrence of any of the following events: at the time of retirement, resignation, or at the time of attaining a certain age, or in the death or disablement due to accident. So in all the cases, what you can withdraw, in all these cases you can withdraw gratuity. So what to do with this gratuity figure? Whether the gratuity, if he is receiving 25 lakhs, whole 25 lakhs is chargeable to tax? Answer is no. He has got a 1010, so that he can claim a deduction under section 1010. So exemption from the receipt of gratuity. Look at this exemption. If you're receiving a gratuity, at the time of retirement, pay attention to the word at the time of retirement. If you're receiving at the time of retirement, then it's going to be a fully exempt. At the time of retirement is going to be a fully exempt. When you're receiving a gratuity, it is a death cum retirement gratuity. If it is received by a non-government employee who are covered under Payment of Gratuity Act, were covered under Payment of Gratuity Act and were not covered under Payment of Gratuity Act. For them, the provision is as follow. Remember, a Gratuity Act 1972 governs the gratuity. If it's a non-government employee who is covered under the gratuity, a least of the following is going to be exempted for them, which is under section 10, subsection 10. Next one, what is the least figure over here? Least is going to be a 3 of the following. 15 by 26 into last drawn salary into completed year of service. A part in excess of 6 months is going to be considered as in 1 year. That is over here. 15 by 26 into last drawn salary into completed year of service. Full stop over here. Next, statutory limit. In an entertainment allowance, statutory limit was 5,000. So in a gratuity, a statutory limit is going to be 20,000, and actual gratuity received, which one is lower, can be claimed as a deduction. Next, what is salary for this purpose? We have read it in the entertainment allowance. What is the salary? Salary for the purpose of entertainment allowance, it's only a basic pay. But what is the salary over here? The salary for this purpose is going to be a basic, a dearness allowance if it is entering into a service benefits. This is called as a salary definition for the person who is covered under the Payment of Gratuity Act. Basic plus DA, irrespective whether it enters into service benefits or not, it is going to be considered. Next one. A death cum retirement gratuity received by a non-government employee or not covered under the Gratuity Act. Remember the word, the first part is going to be a covered, a second part is going to be was not covered under the Gratuity Act. Least is going to be exempt. One is going to be a half into average of 10 months salary into completed year of service. There's a star over here. What is a star mark? A fraction of the year should be completely ignored. If I have served for 24 years and 9 months, and 9 months is going to be completely ignored. What I will be considering for this case, I'll be considering my completed year of service is how many years? It is going to be a 24 years. Here also statutory limit is same. That's going to be a 20 lakhs and the actual gratuity received. Among three, which one is lower is going to be claimed as a deduction. What is a salary for this purpose? A salary for this purpose is basic pay. DA, it forms part of the retirement benefits plus commission based on the fixed percentage on turnover. Please remember, it is in commission based on the turnover. If they give you a commission figure is just 2 lakh, to be considered, not to be considered. No, you're not going to consider it. If they give you the other information, like his commission percentage is going to be 1% and the turnover achieved by him is going to be a 25 lakhs. So this percentage is going to be applied on this 1%, 25 lakhs. This figure is going to be considered. If they give you fixed amount, commission is 2 lakh rupees. No, it's not going to be considered. Next one. You can ask me, ma'am, what is this DA to the extent it forms part of the retirement benefits? We'll go to the whiteboard. Mr. Arya was receiving a salary of 40,000 rupees. His salary was comprised of basic pay 30,000 and DA figure of 10,000. Salary was 40,000 rupees. Now what happened? He retired. He attained the age of 60 and he retired. Once he retires, assume he's a government employee, what he receives? He receives a pension. He is going to receive a pension. In pension also, 2 criteria. whenever you receive a pension, whatever the salary you're receiving in the service, you will be receiving what percentage? You will be receiving only 50% of it. You'll be receiving only 50% of it. Here the criteria is if DA forming part of retirement benefits, forming part of retirement benefits. Next criteria, DA not forming part, DA not forming part of retirement benefits. When a DA forming part of retirement benefits, you're supposed, when you retire, you're supposed to receive 50% of this, no? Basic pay 50% of 30,000, it's going to be 15,000, plus 50% of this figure DA, BP, that's going to be a, sorry, basic pay 30,000 to 50%, 15,000, 10,000 into 50% again, it's going to be 5,000. His pension, Arya's pension is going to be 20,000. Next case, DA is not forming part of retirement benefits. When the DA is not forming part of retirement benefits, he receives 50% of this. What is the figure? It's going to be 15,000. He is not going to receive anything from DA. Why? DA is not forming part of retirement benefits. It's zero. That's why his salary, is nothing but his pension, and after the retirement is going to be 15,000. So hope you understood the concept. DA not forming part of the retirement and benefits, DA forming part of retirement benefits. So the word, what the act may use, or what the word they use in the question paper, DA forming part of retirement benefits, or DA forming part of the employment, or DA forming part of the service benefits. All the three gives you the same meaning. That is this. Hope you understood. We'll solve this question. This question is with respect to a gratuity for the better understanding of the concept, a better understanding of the provision of section 10, subsection 10. Let's start. Mr. Ayush retired after completing 26 years and 8 months. So he has served an entity for 26 years and 8 months. As on 20th July 2021, and received a gratuity amount of 8 lakh. Important figure, this figure is important. He has received a gratuity figure of 8 lakh. At the time of retirement, his salary stood as follows. Basic salary is 10,000 per month. DA is 5,000. In that 60% only is forming part of the retirement benefits. A commission is equal to 1% of the turnover, and the turnover achieved by him is going to be 14 lakhs. Compute is taxable gratuity. Case 1, when he is a government employee, in this case. Case 2, when he is a non-government employee covered in a Payment of Gratuity Act. Next is when he is a non-government employee, not covered. Look at the word not covered under the Payment of Gratuity Act. So let's solve for the first one. What is the first one? It's a case 1, when he is a government employee. As we have discussed, a government employee, when he receives at the time of retirement, you can ask me, ma'am, they've not given me in the question. Case 1, where when he is a government employee, they didn't use the word at the time of retirement. My dear students, please know this. They've used the word over here at the time of retirement, meaning he has retired. So he's a government employee, he's retired. Whenever a government employee receives at the time of retirement, whole amount is going to be exempted under section 10 subsection 10. Please look at the presentation part. This, if it's a whole syllabus, it's going to be descriptive, it's going to be MCQs, and the new syllabus it's going to be descriptive. That's why a presentation makes a very important difference. Case 1, when he is a government employee, gratuity received at the time of retirement is 8 lakh over here. Received at the time of retirement is going to be 8 lakh, less exempted under section 10 subsection 10. Fully exempted, whole 8 lakh is going to be exempted. That's why the amount chargeable to tax, that's a taxable gratuity, is going to be nil. Here. Next one. When he is a non-government employee and is covered under Payment of Gratuity Act. Which employee is a non-government employee covered under Payment of Gratuity Act? What to do? In this, 3 criteria is applicable. First, you should find out what is the salary, last on salary. That's a basic pay plus DA. They told you 60% and all. 60%, all these things doesn't apply for case 2. What is a case 2? If it is covered under the Payment of Gratuity Act, you're supposed to consider full DA figure. You will be considering the full DA figure. So basic pay is 10,000 plus 5,000 is equal to 15,000. How many years he has served in this entity? Let's go to the question. In the question, they have mentioned that he has served for how many years? He has served for 26 years and 8 months. For the case 2, it has to be completed years. In excess of 6 months is considered as an one completed year. That's why it is considered as in 27 years. It is considered as in 27 years as in completed year of service. Case 2, 27 years is a completed year of service. What is the basic salary at the time of retirement? At the time of retirement is 10,000. DA is going to be 5,000 rupees. Okay. Next one. So gratuity received at the time of retirement is 8 lakh. Less least under section 1010. What is the least figure under section 1010? Least under section 1010 is going to be exempted. 15 by 26 into last drawn salary into completed year of service. 15 by 26, out of the 26 days of working, 15 is considered. Half is considered. 30 days, half is 15 divided by number of working days. It's going to be 26. So 15 by 26, it's given by law. Please remember this, it's 15 by 26 into last drawn salary. What is the last drawn salary figure? We have worked out just now. It's going to be 15,000. 15 by 26 into 15,000. Completed year of service, as we have discussed, it's going to be 27 years. It's going to be 2,33,654. Next one, statutory limit. A statutory limit is going to be a 20 lakhs. Next, actual gratuity received. Actual gratuity received figure is going to be 8 lakh. What is the least over here? The least is going to be 2,33,654. This least figure we have bought it outside. So 8 lakh minus 233,654 taxable gratuity figure is going to be 5,66,346. Next one. Hope you understood regarding a non-government employee covered under the Payment of Gratuity Act. Next one, a non-government employee who is not covered under the Payment of Gratuity Act. What is the definition of the salary for them? You're supposed to consider in 10 months of average salary. You're supposed to consider in 10 months of average salary. Now, many have a doubt regarding how to compute in 10 months of average salary. We'll solve this. Take an example. 10 months salary. Every month I'm receiving 12,000 rupees. Okay. So 10 months salary is equal to 12,000 rupees per month. 12,000 rupees per month into 10 is equal to 1,20,000. Next one. Average of 10 months salary. Average of 10 months salary, it's going to be 1,20,000 divided by 10. It is going to be 12,000 rupees. You can ask me, ma'am, why we have to do these steps, 2 steps? Anyways, you know per month is 12,000. These 2 steps are unnecessary. My dear students, please know this. Try to understand this. Suppose for 8 months he has received 12,000. Okay. 2 months before he has received only 11,000. So what is the 10 month salary now? 10 month salary is going to be 11,000 into 2 months. That's going to be 22,000 plus 12,000 into 8. 96,000. So what's the total amount? 96 plus 22,000. It's going to be 1,18,000. This is a 10 month salary. But what is an average now? Average of 10 month salary, it's going to be divided by 10. You will get 11,800. That's why it is not the same. You can take you have a doubt. I can consider a last month salary only. No. Sorry. So what is his basic pay? His basic pay is going to be, as we discussed, 10 months, 10,000 into 10 months. What is this DA? It is going to be 5,000 into 60%. 5,000 here is going to be DA. What is forming part of retirement benefits? Only 60% is forming part of retirement benefits. Into how many months? 10 months. Plus 14 lakhs into 1% into 10 divided by 10. Why 10 divided by 12? Usually the percentages will be given for the whole 12 months. But what we require, it is for the 10 months. That's why 14 lakhs into 1% into 10 by 12. This numerator figure gives you an 10 month salary figure. When it is divided by 10, you will get an average of 10 months salary. So we go to the definition part. Look at this for the better understanding. That come retirement gratuity received by a non-government employee or not covered under the Gratuity Act 1972. What is the salary definition? Salary for this purpose is equal to basic pay plus TA to the extent it forms part of retirement benefits plus commission based on a fixed percentage of turnover. This is a salary. But over here they're asking you average of how many months salary? Here they're asking you average of 10 months salary. That's why you require an average of 10 months salary. Next one. A fraction is going to be completely ignored. Please remember this. In this question, he has served, Assasi has served, Ayush has served for 26 years and 8 months. What is going to be completely ignored? The 8 months is going to be completely ignored. So we'll be considering only 26 years. So when you compute an average of 10 months salary, you will get it as 114,167. Okay. Next one, gratuity received at the time of retirement, a same concept, 8 lakh over here. Okay. Half into average of 10 months salary, half into average of 10 months salary. 10 months salary we have computed, the same figure is going to be brought forward, that's going to be 14,167 into how many years of service? Completed year of service is 26 years. The fraction is going to be completely ignored. The fraction of number of months is going to be completely ignored. 1 by 2 into 14,167 into 26, it's going to be 1,84,171. And statutory limit is going to be 20 lakhs. Gratuity figure, actual gratuity received figure is 8 lakh, which is the least over here. The least is going to be 1,84,171. This figure will be bought without a column. 8 lakh minus an exempted gratuity is 1,84,000. Taxable gratuity 6,15,829. What remains constant? If you observe over here, this 20 lakh statutory limit, 20 lakh, here also statutory limit 20 lakhs in a case 2 and 3 remains constant. Actual gratuity received over here remains constant. What is going to change? 15 by 26 into last drawn salary into complete year of service is going to change over here. First one, half into average of 10 months salary into complete year of service. This criteria is going to change. So gratuity received is 8 lakh, which is exempted under section 1010. Remember this, the exemption section is 1010. The 1010 is going to differ for non-government employee covered in the POGA, non-government employee not covered in the POGA. Next, where being a student, since you are attempting in an objective type, where you will make a mistake. Observe. The question is, what is an exempted gratuity? Exempted gratuity. I'll take this question as an example. Exempted gratuity. You're supposed to tick this figure, 1,84,171. This is the figure which is an exempted gratuity. Or with a hurry, or I don't know whether you will not be sure about the concept, you people will go and tick this. You solve all these things in the worksheet, all these things, it's a perfect. You will arrive at 6,15,829. It's perfect, but you will make a mistake over here. This figure is an exempted gratuity. This figure is an exempted gratuity. 1,84,171. What is in taxable gratuity? Taxable gratuity 6,15,829. Please don't make this mistake. Examination, many people will do this. After coming out, then you'll realize I made a mistake over there. No, don't do this. Please observe the question carefully. A 1.25 marks makes a huge difference. Next one. Do the same mistake for the HRA also. 1013A exemption HRA will be given. The question will be, what will be a taxable HRA or HRA? You will go and tick what is an exempted HRA figure. No, all these things. Please pay attention to all these small things. These are the areas where you lose marks. So there's too many things to be taught in the income from salary chapter, but this is only a glance. I've given just the basics and what about the deductions, and I've started it one of the exemption section, that's a 1010, a very important from the examination perspective also, and from the a practical perspective also.
Okay, so all the best, my dear students. Please work out the other provisions also from the income from salaries. Okay, if you have any doubts, you can contact an Excel Academy. Thank you. Thanks for watching. All the best.